Hello everyone, welcome to another weekend video. It's morning on Friday the 18th, so we're very early in the European session, and obviously you haven't woken up yet in the States, so get out of bed, lazy lumps. Anyway, I'm going to take this opportunity to review the markets and take another stab at it. I've had to eat some humble pie this week, that's for sure. I definitely thought the dollar would be turning by now, but we've just taken hit after hit. But I do want to raise one little issue. I'm just going to go over this. This is a recent chart that we looked at in the nightly updates. This is the COT chart, and this is from a great website called tradingstir.com. So if you like COT, if you like looking at the futures market, the net positioning, tradingstir.com is pretty awesome. This is the US dollar index, and this is, I think, up to the 8th of December. That's the most recent reading anyway, or the most recent data. We probably should be getting data on that today. So I'm probably a bit. If we are getting data on this today, then this chart will look even worse on Monday. Well, I mean, by worse, I mean even more skewed. I think, in my humble opinion, I think the US dollar may be lining up to be the best trade of the next 6 months. I think the US dollar has been crushed lately. And I don't think it was just going to happen. It's all part of the pattern, as they might say, but you won't see the Fed or the US government, you won't see them complaining about it. But I think it's well due a snapback rally. You can see here that we've probably reached the most lopsided, skewed future position in the US dollar in 10 years. I would say 10 years. This chart goes back to 2011, so this is 9 years. We're in a more skewed and lopsided, everybody trading to one side of the boat than we were probably in 2014. And you can see back here in 2014 where the dollar index was hanging out at around 80, sub 80, or touching 80, and then it rallied all the way up to 110, or 106 or 7. So I think we're probably in one of those positions right now. We're probably due a 20% rally in the dollar, and I think the cross rates are pointing that way as well, because the positioning in the euro is just as lopsided on the bullish side. So I'll just go through what I think might be happening here. You can see both asset managers and leverage money, so that'll be private family houses or family trading houses and hedge funds and the like. You can see that they're probably the most neutral on the dollar that they have been, well, definitely since 2018, but I'm going to go with probably a more consensus view than even back in 2014, because even back then asset managers were even slightly long, but we had the leverage money actually short right at the wrong time. And you can see here that the dealer side, so swap dealers and stuff, they have, it's not often that they go long on the futures market, but they're actually, well, paring back from probably a 6 or 7 year longest position in 6 or 7 years that the swap dealers have had. This is just suffice to say that leverage money and asset managers tend to be very long at the tops, and they tend to be neutral to possibly even short at the bottoms. And they are neutral to short now, and we have dealers actually going long, which is almost unheard of. And you can see here that the black line here, dealers tend to be quite short at the tops. So that was true back in early 2020. That was true in late 19. That was true back in in 2017 when you had that big long slide back into early 18. That was true back in 2015, right at the top, even though the market just went sideways. But it wasn't wrong. Suffice to say, I think that we are at a very lopsided market here in the dollar. And of course, the stories are everywhere that the dollar is going to collapse, that Bitcoin is the new gold, and I wouldn't mind that they're not even talking about gold. They're talking about Bitcoin being the new gold. What about gold being gold? Last time I checked, nobody ever asked for me to pay my shopping in either gold or for my weekly food shop. Nobody ever asked for Bitcoin or gold. Now, I like gold long term. I'm a big gold bull long term. I think next year will probably be a very good year for gold. But Bitcoin, I'll talk about that later. Anyway, suffice to say, I think right now we are at one of those kind of inflection points. And I think whether it turns immediately or whether we grind on towards the bottom early in January, I think that the US dollar will prove to be the stories of its death are a little bit too early, or a little bit overstated, let's say. Okay, so let's actually get into the charts. Here is Euro dollar. This is a daily chart. I've always been tracking a C wave. C wave of either a triangle, a long-term triangle in wave B, or a flat wave, a flat correction wave B. We keep pushing and pushing. We're pushing to the ends of the nth of this pattern, and we are, you can see daily on a daily chart here, we are pretty solidly divergent now in momentum, and we have a pretty full pattern. So I'm still counting an ABC pattern because of this triangle pattern here in wave B, and I think we're stretched on wave C. If you go to the 4-hour chart here, you can see the alternate count is tracking a larger degree 5-wave pattern up in wave C of B as a flat. And the short-term pattern here, you can see I'm looking at an ending diagonal. This ending diagonal would be either within wave 5 of wave C. That's the 4-hour chart. So here's the hourly chart. I can see a wave 1, 2, 3. The reason I'm still going with the ending diagonal is because this internal pattern here within wave 3 is best counted as 3 waves. There's no two ways about it. But it's still counting pretty well as a 3-wave pattern, 3-wave decline, and again a rise out of that 3-wave correction in wave 4 as a 3-wave pattern. Now, I thought earlier on in the week that we had wave C done here with a little spike, but we actually created a running flat pattern in wave B, and then we spiked higher out of that in wave C. You can again see on the short-term chart we have a pretty serious divergence off. You will see here the top in momentum in MACD and RSI came in towards the center of this third wave here. So we're diverging lower ever since in wave 4 and 5. So we've got momentum divergence. We've got seriously lopsided positioning in the futures market. We've got almost sickening, level of bearishness against the dollar in sentiment readings and in momentum readings. So I think we're there. I think we're done. Let's see how next week goes. If we get a sharp move lower next week, we'll know that we're done. And the dollar is well and truly cooked right now. It's time to take it out of the oven. Sorry about that. That was a real bad analogy there. Again, the triangle in cable topping in a C wave. I think this whole C wave can be counted as an ending diagonal. There's bloody ending diagonals everywhere. You're going to hear me say that word 10 times this evening, or this morning, sorry, in this video. But ending diagonals everywhere. See the 4-hour chart here, you can see that we've got that 1, 2, 3, 4, 5, and I think wave 5 here is an ending diagonal. You can see here wave 5 is broken out into wave 1, 2, 3, 4, 5. You can see the top of wave 1 was breached by the bottom of wave 4. There we go, ending diagonal. You can see that wave 3 here probably counts better as a 3-wave pattern, so you've got 3 waves up, 3 waves down, and maybe a 5-wave pattern there, but it's messy. It actually could be a double combination. So we have 3, 3, and 3. We've got 3 waves down in wave 4, and then we've got this, dare I say it? Need I say it? Should I say it? I won't say it. You can see the wedge there. We're falling down off, if you connect the wave 1 high with the wave 3 high, the top in wave 5. If this is wave 5 done, I mean, who knows? Believe it or not, I can't actually tell the future. So we have this top trend line here almost being touched by wave 5. If it does turn higher again, we touch it again, and then we fall. I'll be happy with that. Obviously, 131.35 is the wave 4 low, so I'm watching that 131.35 level next week. See if we can get a breach of that level with a 5-wave decline, and then some sort of a lower high next week. Okay, here's dollar yen. Dollar yen is I couldn't actually pick a more stretched market right now. You can see this long, really uncertain decline. You could very well still count this pattern as a 1-2. The rally back in February as wave 1 and a long decline in wave 2. That's still very possible. I'm still counting as an E wave of a triangle B wave, but we're still at a higher low, you know. Need I say more? Okay, here's the 4-hour. I probably should say more, but I'm not gonna. I'm gonna run through. We've got 3 waves down in wave E, and as part of wave C of E, we've got wave 1, 2, 3, triangle 4. Dare I say it? Well, no, it's probably more 3 waves down, but you could read it as a diagonal as well. This is the final decline into this week's low, so we've got maybe an A running flat B and C, so 3 waves down again. So we've got, I think, another diagonal towards the end of this wave C in red here. Probably make that a bit bigger to emphasize its importance. So we've got wave C of 5, of C, of E, of B. Brrr. Make a shiver. We had a spike higher overnight, which was interesting. We got this real sharp move down yesterday, and then a reaction higher overnight. So again, we're hitting this 103, 104 level, and the market doesn't want to go any lower. I don't know whether it will. Again, I can't tell the future, but I'm counting a very full pattern here, and if I could go back to the dollar index and the way that market is so stretched to the bearish side, I can only deduce that we are at or near a very important, I think, a very significant turning point in the dollar. So let's see how if we can push higher next week. We have a previous 4th wave here, 104.56, so that's what I'll be watching. 5 waves up above that. That'll do me. Okay, let's move on. Here is the stock market. This is the Dow. So we've got wave 3, ABC 4, and pushed up to wave 5. If I was to harken back to my previous wave count in the Dow, you could still call this a B wave top, but I'm not going to do that. Okay, wave 5 top, looking for that final tick, which is coming. There's no doubt about that. We seem to have diverged again off the top in momentum here. So we had the peak in momentum at the peak of the third wave. You can see this. Well, let's go back here in June. 6 and 9. Yeah, and the top of wave 3 was in June. Then we had a fourth. That was a third of a third wave, and then we had a correction sideways in wave 4, wave 5 up, and then another fourth and fifth wave. So ever since that peak of the third of a third wave, we've been just declining in momentum. We're still sitting at an extreme, but it's not the extreme that we had in wave 3 of 3. Let's get into the 4-hour chart there. Here you can see that wave 3 of 3. And within momentum, actually in the 4-hour chart, is peaking on the rally at the third of a third peak off the rally in wave 5. So 4-hour is actually matched the momentum in the third of a third of wave 5, or sorry, the third of a third of wave 5 actually matched the momentum at the peak of wave 3 here on the 4-hour chart. But if you draw a line from the peak of wave 1 off the March low, you've got still declining momentum all the way along. I know it's neither here nor there in terms of the actual rally, but it is interesting where we see momentum peak out at points of maximum acceleration, or the end of maximum acceleration. Okay, 4-hour chart is showing a real grind to the top. We're still sitting at all-time highs, actually. Well, the early trade is pushing to the all-time high again. But we are declining. We've got nothing left in this tank, it seems. Here we are on the hourly chart. You can see that I'm counting another ending diagonal. Now, this ending diagonal can be counted a little bit differently. You could go wave 4 in green here, and then go ABC up in wave 1, and then ABC down in wave 2. So the position of wave 4 is, well, it's kind of a distinction without a difference, really. Okay, so we've got a diagonal pattern or a wedge pattern into a top. The wave B here of wave 5 was thinking that we might get a larger kind of a flat in wave B before moving higher into this wave C pattern. But we seem to have this wedge pattern, a wedge at the end of a wedge. You might call that a wedgie, but it's a pretty tight squeeze into a top here. Now this is pretty phenomenal, actually. If I'm right here, then we could see a turn in the dollar and a turn in the market over the next week or two. Maybe it'll last until after Christmas. I mean, next week is going to be pretty thin trading, I suppose. Yeah, so that means I'm going to take a few days off next week. There's nothing going to be happening anyway. So we'll probably do Monday and Tuesday night, and then come back out of it the week after, depending on how it goes. Trading goes on Wednesday as well, doesn't it? I think, or is it a half day Wednesday? I'll have to look into that. I'll have to ask the boss, see if he'll give me a day or two off. Will you give me a day or two off? Okay. We have, again, this wedge pattern. We have a declining momentum. We have extremes. Should I use the hands? Serious extremes in bullish sentiment. We have divergent internals, and we have divergent momentum on daily, on 4-hour, actually on hourly chart right now. We have a full pattern. All we need is a crash. So let's see when that happens. I'm going to work with this pattern until it doesn't work anymore. For the moment, it's working, and today could be the top tick. Wouldn't that be interesting if today was the top tick of wave 5, of wave C, of 5, of 5, of 5, of 5. Oh, so 7 degrees of trend. That's interesting, isn't it? Let's move on. Now, we had a good week in gold this week. I'm just a little bit skeptical right now. I still think this could be a 1-2 pattern, but I don't think 2 is complete just yet. Hear me out on this. So anyway, we've got a wave C of 4 pretty much complete. It seems to be a triple combination. So we've got a 3 big combination 3-wave down, combination 3-wave up, and a combination 3-wave down. So, or a full pattern 3-wave down. So we've got 3, 3, 3. Completed wave 4, and then we have a nice spike higher off that wave 4. I was kind of looking towards that 1730 level for the low to come in, but we spiked higher before that. I was, if it would have been, seeing as we were down towards that kind of support level, would have been an interesting place to kind of start accumulating. But still, I think we'll probably hit an even better position pretty soon. It's hard. It's incredibly hard to pick a low anyway. So it is. So I think we'll get a bigger higher low here, and I'll go to the hourly chart and show you where I'm looking at. Now you could view this in 2 ways, and there would be no reason why you shouldn't. You could easily go 1 degree higher here, and you could go wave 1 here, and then expect a larger 3-wave decline back below 1800 again in wave 2. You could take wave 1 here at the early December high and call for an expanded flat correction. We'd probably hit 1800 again before completing wave 2. Either way, whether you move it, whether you're looking at this as a movement at 1 degree higher, or you look at it at the current wave count degree, I think we're going to see either a further higher low in wave 2 here, as I've shown, back around 1840 or something like that, early next week, or maybe even today, or we see a larger degree higher low back towards 1800, 1810 maybe, and that would be an expanded flat wave 2 in green. So wave 2 in blue or wave 2 in green. I think we still have a wave 2 opportunity to develop. In the long term, it probably ain't such a bad to be kind of nibbling at this now anyway. If you build physical positions, I use Gold Money, goldmoney.com. So they're pretty cool. I've found them quite good. If you are, I'm still quite happy to wait for a retreat here. I think the rally that happened this week will be retraced, either partially or fully, and I may even be leaning towards a full retracement in a larger C wave. So let's see how that goes next week. A decline, an early rally in the dollar actually might cause a bit of jitteriness in gold market. So let's see how that goes. So next week, some sort of a larger higher low in gold. Let's go crude oil, topping wave 4, wave C of 4, still looking at that. And again, would you believe it, within wave C of 4, wave 5 is completing. So that's wave 5 in green, and wave 5 in green is completing with an ending diagonal in wave 5 of 5, if you can track that. So we've got wave 1, 2, acceleration wave 3, 3 waves down in wave 4, and then a 1, 2, 3, 4, 5. A continuation higher in a series of 3 waves. Again, we're up at that upper trend channel or trend line. Wedge is complete. Let's see if we get a spill out of that next week. That would be my take on it at this moment in time. I think this is way too choppy of a rise to be called anything else but a diagonal. So be looking for a decline back below 45 to begin that. Okay, let's move on to the S&P. S&P is still, pretty much along the same lines. You could see actually on the S&P we pushed out above this large trumpet pattern here. We pushed out above, throw over above the upper trend line. I think we are done here. We are well cooked in the S&P. See the 4-hour chart. I'm not saying that it's going to collapse immediately today, but if it does, don't be surprised. We have a fifth of a fifth of a fifth possibility, and within this wave 5 blue, I am tending again towards the ending diagonal idea. As you can see here in the hourly chart, you've got a wave. There's 2 ways of viewing wave 4, but I'll get rid of that alternate one right now. I think we've probably got a cleaner triangle here. So A, B, C, D, E in wave 4, and then 1, 2, 3, 4, 5. Slowing momentum, real overlapping pattern. We're pushed up towards a new all-time high this morning in the futures. Let's see if we get a spike to close out this pattern this evening, or this morning, let's say, when the US market opens. So we might get push up towards this upper trend line here. But we've got 5 waves within wave 5, within wave 5. And again, everything else holds in terms of sentiment, in terms of momentum, in terms of the patterns. We're done here. I mean, oh, excuse me, back is twisted out of shape this morning. I think we're done. We're done here. But I've been saying that for a while. Don't listen to me. Listen to yourself. Okay, I'll be looking for a turn next week, and we'll see how that goes. On silver, I'm a little bit more skeptical on silver than I am on gold, believe it or not. I think silver has overplayed its hand here. Here is the 4-hour chart. You can see in general, wave 2 is what I've been tracking. This is a large 1-2 move. And even the, we go and get a retracement on this. The retracement did, it dipped towards the 50% retracement, but we never got there really. We seem to have just grinded sideways over the last 2 to 3 months. If you get into the 4-hour chart, we can see what I'm kind of thinking about right now. Excuse me. I think we are looking at the development of a large B wave here, I'm afraid. It seems to be again a triple combination wave, so it's 3 waves up in A, complex 3 waves in B, that's an expanded flat 3 waves in B, and a complex expanded flat 3 waves B, if you want to call it its technical name. Now, I never use the WXY labels just because I don't like them. So we've got a large ABC pattern, and again 3 waves up in wave C. It looks to me right now too much like a large complex flat, and I think we might pay for that pretty sharp rally that we've experienced over the last few weeks. We might pay dearly for it, especially if we see a turn in the dollar. Again, eventually I think they'll both rally together, but the potential for a large B wave here and a turn down into a C wave is pretty high at the moment. You can see here there's the A wave high, A, B, C down in wave B here, and then we've got an A, B, C up in wave C. I have the bullish alternate count there, but I am leaning pretty heavy in favor of this bearish count right now. So, well, let's see how it goes. I would expect at least some sort of retracement of this week's rally next week. So you should probably look for at least a decline into that 24 level. 2480 is the top of wave A there. Wave B here is 2357. If we break wave B, I think that's it. We're going down into a new low in wave C, so that'll probably be below $20 again. I think, you know, it's staring me in the face, a three-wave rally, a filled trend channel, and, you know, extreme momentum, pretty quick flip in sentiment as well. So, but bullish long-term, I think we need some sort of a capitulation here, either in a correction or another new low in wave C. So let's see how that goes over the next few weeks. Oh, we'll look at Bitcoin before we go. Does anybody remember back in November and December in it's ancient history, but it's 2017, the year 2017. It's three whole years ago. This month, 3 whole years ago, we had a blow-off top in November and December, where Bitcoin rallied from the low in November 14th. It rallied from let's say call it 5.5 up to almost $20,000. So it rallied $15,000 in the space of 2 months. Anybody remember that? It's there. It's written on the chart right there. There it is. So let's just go back to early October, where we were tracking a triangle in a fourth wave, expecting rally. I was expecting maybe somewhere up around 15,000 to fill out that trend channel, and we got that. And then we got that and more. So we actually went from, say, 10,500 up to 22,000, 23. What was the top yesterday? 23,700. So that's a $13,000 rally in the space of 2 months. Huh? Tell me what's changed. You know, I see every sort of justification of this right now. You know, from adoption by large trading houses, adoption by pension funds. Let me just remind you that it's actually fresh air. It's not even fresh air. It's electrons, you know, flipped to it's binary electrons. Binary numerology saved on an unsafe server somewhere. But anyway, despite its flaws, there's probably some application for it somewhere. Election security. It could be, the blockchain could be used in election security. That'd be pretty cool, wouldn't it? But I just cannot get away from the fact that this is a big three-wave rally, and we've just experienced a blow-off top in wave 5 of wave C, and we've put on the same sort of rally that we did into the top of wave A. We've put on the same sort of rally right now into the top of wave C, and please don't remortgage your house to buy Bitcoin right now. That's all I'll say. I'll end that right there. We haven't seen the turn just yet, but we will see the turn, and it will be devastating. So no, Bitcoin is not going to replace the dollar. I'm sorry. Okay, I'm going to leave it at that. God bless you all, everybody who watches this video. You know, I pray the blessing of the Lord Almighty on you all and all your lives and all your families and everybody. I think we're walking straight into absolute catastrophe here, and I'm not talking about Bitcoin. I'm talking about across the board. 2021, I think, is going to be horrendous in the markets. Let's see how it works out in real life. That's neither here nor there. That's neither here nor there in terms of this weekend. Wish you all the best of luck and the blessings of God. And we'll see you on the flip side on Monday. For all you website subscribers, I'll see you Monday evening. Oh, actually, no, I'll see you later on tonight. I won't see you, but we'll catch up later on tonight. We'll wrap up the patterns. Check out the website and be good. God bless.